Welcome back for another top-notch video. This week, guys, we'll be looking at May 6th through May 10th. What happened in markets this week? As always, our channel is about TSP and Roth IRA accounts, retirement accounts. If you're in the TSP, we talk about the CSI and F funds. And if you're in a Roth IRA or 401k, we talk about ETF, IVV, VXF, EFA, and AGG. What do these mean? C fund, IVV is the S&P 500. S fund or VXF is the small caps. I fund, EFA is international markets, and the F fund or AGG is bonds. If you guys have any questions, go ahead and write them in the comments below. We always kind of do a general overview of a couple websites and dig kind of into the more specific facts and where our stocks and bonds, or where our portfolio is allocated. That being said, let's go right into it. So for this week, guys, we're going to first take a look at TSP Talk. Tom does some commentary here. Very good website. I definitely recommend checking them out. This is all their facts and stats, so please look into that if you're interested. For the CNS funds for the week, we were down about 2% for every fund, so C, S, and I funds. G fund was up a little bit, and our F fund was up just a tad. I mentioned last week about possibly seeing some kind of pullback towards the end of May. Seems like we're seeing that a little bit towards the beginning of May, first half of May. So just little time periods. Markets have been going up a lot lately, so it's good to see a little pullback in this. How far can we see this go down? We'll kind of go over that in just a minute. That's kind of overall what we saw, and I'll kind of go into a little bit of analysis about that. Looking at some historical cases, this is CCM Market Model. They have some good charts in a YouTube channel. That's where I pulled this from, so just keep that in mind. Looking at some of these historical cases, a lot of these are similar to what we're experiencing here in 2019. The average drawdown was about 2 to 3%, with the maximum drawdown about 7%. So this 2% is kind of a very normal pullback. We hoped to kind of catch that and gain that back, but we did not. So I'm hoping for maybe a little bit more of a pullback, and then we can jump back in with our funds. We are currently out of the S fund currently as of this last week, but I'm hoping we could just see maybe a 1 or 2% more pullback before we can see markets go up again, and then we can get back in this market. And that's kind of our goal, is to always, when the market drops a little bit, to kind of try and catch that with our TSP account and try to catch up to some of the fun run up we saw in January, February, and March. One thing that we noticed that Tom had in his commentary and also in the CCM Market Model was we saw this nice rise for the last couple months, and then we saw a drawdown. This drawdown has occurred for pretty much the last bit here. And one thing we saw that was healthy was usually when we see a gap in the market comes to revisit those gaps. So we did see that gap get filled, and then with that gap, it stayed above that gap. It looks like it almost tested that and refilled it. We do have another small, very minor gap right here, so we'll have to wait and see if markets come and fill that. From a box perspective, for the C fund or the IVV fund, we are making higher highs. So this is the beginning of 2018, this is September, October, and then this is now in May and 19. So we are seeing higher highs here. From a box perspective, we're seeing kind of these things here, kind of seeing up and down within this box range. This is the second time we've gone above the box, and we've had kind of a breakdown. We did see it get a little bit above the box here again, and we'll have to wait and see where this goes. But as you can see, we are testing some critical levels in here. Again, this is a third box. I really think with this yellow box, we could still see some price action within these categories or within this area before we could see charts move higher. So just keep that in mind. So if you would have stayed invested during the drawdown, which I showed earlier, which was this chart here, if you would have stayed invested, just a buy and hold person, and you just would have stayed through some of these bad drawdowns, what would your account look like after that 90-day period? So after that 90-day period, all charts are green. So we really want to be careful about how long we're out of the market funds, because anywhere from 180 days to 360 days, you can see the average gain and the median gain were almost 15%. So we don't want to stay out of the markets for a long period. We're out just for a little bit and trying to catch a little bit of that market action as it goes back down. Probably just like 1 or 2% before we try to get back in. And then finally, these are our moving averages. As you can see, 2019, we are above all our moving averages, and things are going very well. It doesn't look like any of these bullish cases here the bullish case or bearish cases here where It was within the moving averages and then ended up moving lower. As you can see, down sloping, down sloping, down sloping, down sloping. We're starting to see some kind of middle of the road averages, and we are above that for right now. So that's just kind of some general overview chart analysis. Moving back to the TSP website and Tom's stuff, as you can see, we are kind of on a decline here with our S&P 500 or the C fund. It hit that 50-day moving average, and we did fill that gap, which I'll show you. Where will this go from here? I could possibly see it. I don't want to give any market speculation, but when I go more into my depth of my charts, I can kind of say where I think it'll go. But I think we could possibly see this come back to hit and revisit the 200-day moving average. And if it does that, we'll definitely pick it up somewhere in here to try and get some of those gains we lost out earlier in the month of March and February. As you can see here, we had that gap filled, which I showed you on that other chart. Tom shows that very, very well. There is another small gap that he showed. I'm sorry, it wasn't here. It was way back here. Somewhere right around our 200-day moving average. I don't think we'll get, maybe we'll revisit this, but we'll have to wait and see. But charts do tend to fill their gaps when they do have gaps, so just keep that in mind based off of history. For the S fund, we did see it hit that 50-day moving average as well, but it stayed above that 50-day moving average. So again, very good. But we could see it's just markets are, with all the talk in the news, I think people are really lenient on where they should put their money based off of what we're seeing with some of the trade war talk and whatnot. But I could definitely see this, if trade war talk doesn't improve, I could see this coming and revisiting the 50-day moving average. As you can see, we tested it back here in March, and then in April. Probably see it test it one more time before we continue to see more highs. The I fund has already tested the 200-day moving average, and it broke its trend line. Basically, I don't know where this will go yet. We have to see an improvement on the charts before we could invest in this. With AGG, we did see almost a double top here, and then it broke above that top. With AGG moving up higher, that means stocks could technically move lower, so just keep that in mind. So that's all of our funds, kind of a general overview of each one of these funds that I talked about, the CS, I, and F, and our ETFs. Now we're going to go into our more specific analysis. So starting with IVV or the C fund, one thing that is kind of a red flag for me that I saw on the C fund chart for the week is we did come up here and we kind of saw like a double top here. With a double top, we could see this come back down. I really think we could probably revisit this 200-day moving average based off our chart activity, which I have for TSP on IVV. We did see charts have been moving higher on our weekly averages with our oscillator, and they did move down lower this week. We're even seeing it move lower on our 200-day moving, or on our 2-day moving average, and our blue line did cross our red line. We'll have to wait and see if we can get this back above the line, but until that's the case, we'll probably hold off on investing in this fund just to see where that goes. The last time we ended up going weekly on the negative, we had extremely a very big rare plunge. So just keep that in mind. We're just gonna wait and see where things go from here, and we'll move on to the next fund. VXF or the S fund is consolidating from all the gains. I think this is a real good consolidation period here. We're hitting some resistance here within our moving averages, kind of testing those moving averages, and we're still above our 200-day, but I could see that move just a little bit lower to test that. Based off our charts, with VXF, we saw some very we saw this big oscillator move down, and then charts were kind of just price action was just kind of neutral for a number of weeks, and then we saw some indecision here in our oscillator with the blue line above the red line. So we saw some price movement up, but now that oscillator is moving back down again. With that being said, we decided to redeploy some of our capital for this last week, and we decided to move it out in from the S fund to the G fund just to protect capital and see if we can't get back down to something like a 114 or 115 level to reinvest and maybe pick up some of those shares that we lost out on earlier in the year. Moving on to EFA. With EFA, like I said, it bounced off that 200-day moving average. We want to see where that's going to go from here. Fund is, I think it's definitely coming out of its bear market. It's definitely showing us a lot better potential than it had in the last year. With EFA though, we are moving again down on a weekly oscillator. We went from 4.25 to 2.79, so big change there. On our 2-day charts, we are negative, blue line above the red line. We want to see that start to head the opposite direction before we start investing in that fund. With AGG, another fund that's been down the last year, I think we're seeing some definite improvements with AGG. We invested into the G fund instead of AGG for the sole reason that the AGG fund is also on a weekly basis coming down. It's in the negative territory, and that blue line's about to cross the red line. With that being said, we just didn't want to risk anything for what we have, and just continued on with what we have and putting in that safe G fund for a very short-term move. So that's what we have for AGG. As you can see here, on a 2-day, it is looking like it's coming out again, so that would be a positive. But we'd like to see that blue line cross the red line before we invest. That brings us to the conclusion of all our funds. Thank you guys for watching the video. I really appreciate it. If you have any questions, concerns, or comments, go ahead and write them below. And always, this is our allocation. We moved it from the S fund this past week to the G fund for a very short move, hoping for a 1 to 2% gain, or for those things to maybe come bounce down off their 200-day moving average and then get back into it. It very well might not do that. If it doesn't, then we'll have to be quick to jump in next week or the week after back into that S fund and continue to see as charts are overall in a decent position to continue higher based off of based off of prior history and what we've seen in charts. Once again, that's another top-notch video. We'll see you guys next time.